my fellow option traders. I'm going to take you on a new journey. That journey is going to be with BKNG $1,845 call chart and how to use call charts and how to beat the markets. Over here, I have a BKNG November 29th, 1870 put. Now, the part that we're going to share is price deflation, meaning that when the prices are totally deflated, they're not going to stay down there and you're going to get a big pop. Now, the chart that I have before me, below me, is a daily chart, a BKNG. You can clearly see here, BKNG $1,845 call chart, which was deflated in price. We had a 3-day breakout to 1,884, and we did. So we want to share that 3-day rally in the stock was the verification that by using call charts, and 99% of the option traders haven't used them and whatnot or seen them, and you have to know when to be the buyer and the seller, and 99% of the retail public, once that option does hit a certain price, it doesn't get sold or transacted, and then the values drop significantly, $6, $7, $8 a contract, and they go down. Making a market is using the call charts and the put charts to define the inflated and deflated mathematical imbalances in the exact strike prices. I clearly show right here a 3-day breakout on BKNG, price 1837.01, breaks out right up here to 1884. Okay, and when that deflated call chart was down there, that's a $40 move in 3 days in those options. And this is the part, my fellow option traders, is that I'm trying to share with you, and that you can take a free 5-day trial, and you can see it right down on a 15-minute chart, and making a market, and understanding that the 1870 puts up here were totally inflated, just the very opposite of the deflated 1845 call that went skyrocketing with the 3-day breakout. And you had to know when you were at the bottom in the equity, and we did. And so the 1870 puts were inflated, and they had to come all the way down here. Now, if these puts go, if these stock price here was to fall back and go below 1870, then the value of that put option would go up in value like that. Now, I'm just telling you, that is why it would go up, so you know why. So it would have to drop below 1870 as an example here. So you can clearly see it is deflated in price, don't get me wrong, but these things could drop down to the next price that could be deflated down here at around $5.20. It just depends on the stock price, but this is what would have to happen for you to get paid, and there wouldn't be any doubt at all in it, and the success would be there. So by understanding the actual application used when defining wholesale prices in options, which are deflated, and understanding why they would go higher, and that the stock price on BKNG would have to break out, and it did. And the put side went down now, and it's in the deflated value area. They have changed hands now. We're here to take you down that free 5-day trial. at 702-685-0772. Not only are we willing to do that, we are going to show it to you when it's the live entry with the live call charts and the put charts. We're going to open your eyes. You're watching this video because the reason you're here is what you've been trying to do hasn't been working, and we know it. And the other places or programs you tried in the retail model didn't work for you either, because you wouldn't be here if they did work. So let's get down to making one point clear: how to improve you, take you higher, take you to different levels, and open your eyes to a new adventure of making a lot of money and making markets with call charts and put charts and equity charts at the same time, understanding mathematical imbalances between strike prices, and there are very many more. I'm not going to throw it all in the video. What I am going to tell you, though, is that you can change your option trading today, and you can. All you have to do is sign up for the free 5-day trial. It'll be in the video link in the description of the video. Click on it and you're in. Now, when making markets, this applies to all stocks, but you have to understand the key component of values at strike prices that have had a high value. People own them up there, and then they drop $7 or $8, and then they get deflated. That's when we're the buyers. We just want to let you know it, and that's why we're taking our time to give you an introductory. Yes, to open your eyes today, right now, if you're willing to. But I hope that you made it this far, because if you did, you're just one step away from becoming very successful. That I can show you and would love to show you.